Hi, I'm Jim Jubak, and welcome to my YouTube video for June 30th. The saying, of course, is there's nothing as rare as a day in June. This is the last day of June, so if you had an option, they're about to expire. Okay, so if you want to see more of my stuff, you can go to my free site, jubakpicks.com. It's got 3 portfolios, lots of stock picks. You can go to my subscription site, jubakam.com. 6 portfolios, more stock picks, more macro stuff. Okay, today's title is 3 picks for the earnings blowout. I'm going to give you JP Morgan, Taiwan Semiconductor Manufacturing, and Advanced Micro Devices. We're about to head into second quarter earnings season. JP Morgan starts it off on the 13th of July. What we're getting is a kind of refutation of the usual move, I think, which says buy on the rumor, sell on the news. The rumor is, or the projections are, that we're going to see a huge jump in year-to-year earnings growth. Wall Street is saying about 61% year over year. This is somewhat of a statistical anomaly because it's a comparison with the recession quarters of 2020 to the recovery quarter of 2021. But one of the things that's really interesting and what makes this something to buy as opposed to sell is that it looks like Wall Street is way behind in terms of increasing their earnings estimates. So, for example, last quarter, first quarter, when we had 40% earnings growth year to year, we had a record number of companies increasing their guidance above what the S&P Wall Street consensus was. That was 59 companies. Right now, we're standing at a new record. We've got 66 companies with guidance above the Wall Street level. That certainly implies that Wall Street analysts have fallen behind, which is typical. Wall Street analysts always lag a little bit either on raising their estimates or cutting their estimates, so this wouldn't be unexpected. The other thing is that it looks like the overall estimate for second quarter earnings, this is the aggregate quarterly earnings for all the companies in the S&P 500, right now is at $44.91 for the second quarter. That would, strangely enough, be a decrease from the actual earnings in the first quarter, where it was $49. It's really unlikely that we're looking at a decrease in earnings as economic activity has gotten better. The likelihood is, again, there's a lag, that Wall Street has fallen behind in raising those estimates, and that we're going to see a lot of beats this quarter, which implies that we're going to see stocks that do really well, but even, as the companies announce earnings that beat the Wall Street estimates. Whether you want to hold them or not depends, I think, on your estimate for third quarter, because third quarter earnings growth year to year is going to be slower than it was in this quarter because of, not as much of a big bump from a bad quarter in 2020 to a great quarter in 2021. Still solid growth, like up 30%. Anyway, let's look at some charts. Okay, first chart is JP Morgan Chase. As I said, JP Morgan is going to kick off earnings season with reporting earnings on July 13th before the market opens. You'll notice that this is a pretty typical chart for a bank stock in 2021. Bank stocks historically have done better when interest rates are going up because they borrow really short in the commercial paper market, 30 to 90 days. They lend long in the mortgage market. So that's when that spread gets wider, they make more money. So that's anticipation of higher interest rates there. And then we've had to come down because, interest rates look a little delayed, whatever. But you notice that we've had an upsurge again, and that's as people have started to focus on earnings. Now, last year in the first quarter, the bank reported earnings of $1.38. This year, the estimate from Wall Street is for $3.07. That would be about, 122% increase in earnings year over year, which even beats the 60% forecast for the S&P as a whole. What's really interesting about about this stock is that in the first quarter, the company reported an earnings surprise. It beat estimates by about 48%. The likelihood, of course, is that we'll see, this is in my judgment, we'll see another big surprise when they report second quarter earnings. So this is a stock that I might want to look at. It's been down, it's now up. But we're not looking at a big resurgence from June 18th when it was at 148. It's picked up about $7 a share, now 155. I think if you look at the chart, what's really interesting is that it's a higher low, again, positive. Okay, that's the first one. Second one is Taiwan Semiconductors. You see, this has been a really bad year for TSM, but a recovery here. What's interesting to me going into this quarter is that the company is saying basically that they're going to report record revenue for June, which implies for the whole quarter. So I think you see a good chance for an upswing here off of this big decline. They are the biggest and dominant global chip foundry. Chip demand is huge. So I think the trends are going with them as well. Last one is AMD, Advanced Micro Devices. You see this stock has been going up like a rocket, so you're playing momentum here. And I think that the momentum is going to be pretty good. Earnings a year ago were 13 cents. This year the consensus for 48 cents. That's a tiny little 270% increase. First quarter surprise was about 24%. So again, there's a likelihood that they will report really well, way above Wall Street estimates, and could see an earnings surprise. So that would be my third stock of the bunch. Okay, so as we're looking at this quarter, one of the things to think about is, well, I think for a short-term trade, we're looking at a really positive set of surprises. We're looking at a fair amount of momentum. The quarter, earnings season stretches for a month now, so stocks in the early part will sort of set up the latter part. I don't think people will want to move out of this quarter until the earnings are done, but definitely once this quarter is done, I think you need to revisit your thinking about where the risk reward lies. If we get a big blowout quarter in earnings, we're now looking at a lower earnings growth year to year, although still a very good third quarter, but also more expectations for possibilities of negative surprise from the Fed surrounding the August meeting in Jackson Hole and the mid-September meeting on interest rates. So short-term trade, yes. These are three good stocks for that time period. After that, I would certainly take a look at where stocks have gone, where stocks are coming from, what the risk rewards is for the rest of the year. So thanks for listening. This is Jim Jubak. If you want to see more of me, there's my free site, jubakpicks.com, and there's my subscription site with even more picks, more portfolios, 6 as opposed to 3, at jubakam.com, and you can see all those URLs down below. Don't forget to like and subscribe.